Hey guys, Travis Daggett with Cornerstone Properties talking today about mortgages. And we're just going to talk about the three most common types of mortgages in general terms as an overview. There's all kinds of details we can go into later, but it's important to know at least the three types of mortgages. And the first type, and the kind that's been around the longest, is called a fixed rate mortgage. The rate is the interest rate that the bank charges. So most people's mortgage payments are made up of principal and interest, and also included are taxes and insurance, may or may not be included. But the principal, of course, is the balance of what is owed. The interest is how the bank makes their money. Now, right now, interest rates are very low. The average rate, or I guess people would say the common rate or the median rate historically is 8%, and now we're down at around 4%, depending on the loan. Some lower, some higher, but interest rates are low. So people can usually get a fixed rate loan, and those are generally for 30 years. But that's a fixed rate. The next one is called an adjustable rate mortgage. So, of course, it's just like it sounds. The rate adjusts. Now, it's typically tied to an index of some kind, usually the prime rate, which again right now is low. So right away you can kind of think, okay, what's the risk? So usually a fixed rate mortgage is going to be a little bit of a higher rate. Adjustable rate is going to be a little bit lower, but the risk is that it adjusts to a much higher rate. In other words, if let's say the prime interest rate is 4 and next year it goes up to 8, well, now all of a sudden your mortgage could double, your mortgage payment could double. So there's the risk. Now often fixed rate mortgages, adjustable rate mortgages will be fixed for a time and then they'll adjust. So maybe it'll be fixed for 5 years and then it's adjustable. The thinking is that people can refinance at that time. The challenge there is a lot of times when people want to refinance, the rate is not favorable, and that can lead to big problems, people missing mortgage payments and then going into foreclosure. The third general type of mortgage is a balloon payment. So that's a mortgage where somebody is making payments and there's a certain term. Let's say it's a 30-year mortgage, but there's a balloon payment due after 5 years. What that means is basically the loan is amortized or spread out over 30 years, but in 5 years, the person has to make has to pay off the entire loan. So it's kind of a way of calling it due at 5 years. Now, the lender and the borrower could negotiate at that time and maybe extend it out and put another balloon in another 5 years or 10 years or whatever they want to do. But the idea is there's a balloon payment. So all this, you're making these small payments and all of a sudden it balloons up really big. And so of course there's risks in that type of mortgage similar to an adjustable rate mortgage. All of these different types of mortgages and understanding them or not understanding them are what can really cause people some problems. People tend to think that whatever interest rate or mortgage they have now is going to stay that way. People tend to think that their income is either going to stay the same or go up over time, so that they tend to think in terms of, well, it may adjust, or it's really tight right now, but I'm going to get a raise or something like that. However, if those things don't occur, so somebody's income doesn't go up, or somebody loses a job, or there's a death or some medical bills that come up, now all of a sudden somebody can't make their payment. So that's where people run into problems. So hope that helps explain the three types of mortgages in general. And we work with a lot of people and their mortgage, or rather we help people to avoid foreclosure and to sell their house and be able to move on and be done with that and not have so much damage to their credit and get some money in their pocket at the same time. If you have any questions or you have a house like that where you're having some difficulties with your mortgage, give us a call anytime. Thanks. Travis Taggett with Cornerstone Properties signing out.